Hi, this is Kelly Lee McFrederick with Beach Natives Real Estate with Remax Metro, downtown St. Pete. And I really have a special guest because this is so many important questions that we talk about. This is Jack Rice with Jack Rice Insurance, a locally owned second-generation insurance company here, so knows an awful lot of knowledge. And what I want to cover out, we always have a lot of confusing questions about homeowners insurance in terms of how do we get quotes based upon the contents of the home, and how do they actually quote the home? What creates that quote that we get back? What do they look at?
Each insurance company is a little bit different, but unfortunately the main writer is a company called Citizens, which is backed by the state of Florida. But the home is determined by the age of the home, the location of the home, the construction of the home.
So we know concrete block sometimes gets a little bit better value than frame.
Correct.
Okay.
So it would be concrete block, frame, or masonry, which would include a concrete roof.
Okay.
Which not many homes have a concrete roof.
And what is your opinion? Because we have them in so many we get so many varying prices. That how is contents judged? Who comes up with that content price?
You really should determine the value of your contents or the items that you own inside your house as far as the value is concerned. There are a lot of agents out there that will quote no contents or very low contents. So you need to really evaluate that part of your quotation before you actually purchase it and compare it to what you think you actually have. Sometimes you may have too much coverage and you may want to reduce it.
Good advice.
So it's just whatever the value of whatever you believe that you could repurchase everything inside your home to replace it. That is, to buy new for old.
Now, one of the big questions that come up is learning how they come up with that actual quote. And we talk about the replacement value of the home. Tell me how they structure that. How do they come up with that replacement value to quote that insurance for homeowners?
There are a couple of companies out there that will actually help determine the value of a home. But basically, it's what it would cost to rebuild the home. Rebuild it today from bottom up. And they have a survey company called Marshall and Swift that is the most commonly used. So if you purchase your home for $100,000, but if the insurance company says it would cost $180,000 to $200,000 to replace, they're going to make you to insure it for the value to replace it, not for what you purchased it for. So it doesn't matter what you bought it for, because that would also include that. It's only what the value of the home is to replace it if it needed to be rebuilt.
And last question, if we have this house rented for part of the year, how does that affect our insurance with the tenant?
There are different forms of insurance. You may have heard of a form called an HO6, which is a standard homeowners that you occupy. If you are renting your home, it is a dwelling. It is a rented dwelling, and so there's different forms. So if it's not insured as a rented dwelling, and it's insured as a home, and it has a claim, and you don't live there and they find out, they will deny your claim.
Oh.
So it's very important to insure it for what it is and to tell your agent exactly what is going on inside that home.
And that protects the liability of that homeowner too.
It protects you as the owner of the home for a claim, whether it's going to be paid or not paid. Because if you didn't insure it properly, it will not be paid.
Wonderful. Thank you, Jack.
You're welcome.